talk about what the global setup as well is looking like. Ed Yardeni joins in on the show right now. Ed, hi, morning. Good to have you on the show, and evening to you. Thanks for staying up late. Just wanted to understand what should one expect from the Fed at the upcoming FOMC meet, because it's a bit of a tightrope walk like we were talking about just last time, with the GDP print on one hand and inflation on the other. It seems like it's a diminished case of rate cuts just yet.
Yeah, I think the most likely scenario is that Fed Chair Jay Powell on Wednesday after the FOMC meets at his press conference basically reiterates the position that he and other Fed officials have had of late, which is there's no rush to lower rates. There's no talk among Fed officials to raise rates. They are feeling pretty comfortable where rates are right now and thinking that over a reasonably short period of time, maybe over the next 12 to 18 months, inflation will continue to moderate and that they will get closer to their 2% target. But they certainly aren't going to be moving to lower interest rates, certainly not at this meeting. And I don't think there's going to be a rate cut this year at all. I think the stock market's kind of come to that conclusion and learning to live with it, but it could mean that the market stalls here for a while just to absorb the fact that we've got a higher level of interest rates.
So Ed, when we last saw the dot plot, the expectation was that there's going to be perhaps 3 rate cuts. You're saying this year one shouldn't expect any. Do you think this is priced in the market? Do you think everybody is factoring in that there's going to be no rate cut this year or no rate movement at all?
Well, if I use the 2-year Treasury note as a pretty good predictor of the year ahead Fed funds rate, if I use the 12-month futures federal funds rate, the market, those markets are saying that we're going to see something in the neighborhood of, I'd say 2 rate cuts, not 3 rate cuts. So that's where the markets are, in my opinion. So they haven't completely discounted the likelihood that there will be no rate cuts at all this year. But keep in mind, when I'm looking at the 2-year and now looking at the 12-month forward, we're no longer talking about just this year. We're already in May. So over a 12-month period, we could still have rate cuts, but maybe not this year.
Okay. All right, Ed, really appreciate your time and so glad you could join us. I'm just going to connect